All right, it is Sunday night, the weekend of August 11th, and welcome to the Trader Hub Weekly Market Review. Taking a look at the price action for the indexes last week, starting with the NQ. Obviously last week was a pretty rough week for the market, further downside. This week we ended up getting a little bit of a relief, although still a ton of volatility in the market. On Monday on the NQ we kind of retraced back higher. I do like these tests and even though we ended up having quite a volatile move here, we are continuing to see higher. Very locally, we did on the way down the week before have this little tiny test here. You can kind of barely see it, this little green candle that attempted to hold at 18,460. That kind of ended up being, this week the level that we struggled to really gain and close above. And we finally ended up doing that late on Thursday, and into Friday we ended up testing that level again and holding. So this does look like the beginning of a nice potential retracement higher, but that does bring us back to the daily chart. We really look at the NQ here, we can see these are some deep tests on the way down last week, and what we're looking for this week is if we can kind of continue higher here and really regain above if we can get closes above 18,700, we should be able to move higher and sort of retest the failure that sent us down on the last lower high. So somewhere up here in, even as high as, 19,800. Really, that's the level that we really need to regain to invalidate the downtrend. So one of the big things here is, where did the trend reversal confirm? We had this way back here in July. We had this first, higher low, but then we got our lower high and then confirmation later that month. So what we're really looking for here to invalidate is to close back in the range that it tried to hold to kind of confirm the downside. So really all the way back up here at 19,800-ish. I think we have it marked, 798. If we kind of really need to close all the way back up there on the higher time frames to invalidate the short legs here on the daily and weekly time frames. But locally on the 4-hour, if we can regain 18,700, we should be good to sort of retest this higher range here, and I'll be looking at 19,800, trying to get back above the failure that sent us down there and the failure on the retest. So I will say that if we end up moving further downside, a lot of these levels are tested. I wouldn't hate a retest down here at 18,071 if we can hold this failure that sent us up the top of the range there. If we can go back down there, hold it, and get a retest and push higher, that would look great. Otherwise, if we make further downside and lose that level, a lot of those levels are tested, so I would expect quite a bit further downside, probably closer to 17,000 even. So that could be a potential drop of 1,600 points from here. So that's a big one. Those are kind of the levels to watch in the NQ. The ES, not too different, although kind of riding the major level, right? We continue to point this out, the failure to failure fib from 2022. We're right on the fib there, so 5,365. If we can regain this, it'll be like a nice clean gain. You can take a test and expect all the way up here at 5,500. If we look at the daily, kind of get a little bit more clarity on the levels need to gain, that kind of matches up with the level to hold that failed, right? That sent us down. So if we can regain definitively 5,365, then we can look to long a retest all the way up to 5,500, which is a great area to, if we can regain that, we can talk about coming back to all-time high. Otherwise, if we can't gain this area up here, it could be a failure again for another potential swing low or testing any of these lower areas again. So yes, not too different, but that's kind of what we're looking at here. The RTY, we had this idea planned out of potential outcomes for the market here, and really this week is just more sideways consolidation, though this is a bit of what we wanted to see. I mean, obviously we don't want to see pushes lower, but if we do see them push lower, we do want to see them get bought up, and we do see that. So we had this slurp down all the way down to like just under 2,000 on Monday, but ended up closing back sort of in the range, and all the tests ended up kind of, you know, well, the lowest test since then was still higher than that. So really what we have is like a slurp closing back in the range and some nice higher lows in the context of this consolidation here. The levels to gain and levels to hold really haven't changed. If we can regain 2100, get a close above, we can think about moving back up. If we lose this range, you know, since these levels are tested that we just pointed out, it's really going to be more likely that we see low 1900, so 1940 marked out there. That's quite likely. But the actual TA on RTY hasn't really changed. We need to regain 2100 or we'll likely end up moving lower. Gold, kind of a really constructive chart compared to some of the others. So, you know, we did end up making a new sort of all-time high. Previously, kind of a nice little swing down last week, but it's just, you know, at this point, a higher low. If we kind of zoom in, get a little bit more surgical on the 4 hour, the level that really sent us down on the failure locally is 2500 even. So if we can regain that, we'll even mark that out, right? So we can see the test there, fail, retest, fail again. So we made a new low. We're starting to regain, as we did regain 2462. If we can take out 2500 again, we should be able to make new highs. Otherwise, if we can't regain 2500, we will make a new low on that swing. So think about a retest down here or even potentially lower. 2430 doesn't seem too bad. Those are kind of the levels we're looking at. But otherwise, you know, continuation seems more likely right now. Gold longs are in a good spot. The Dow, again, kind of like RTY, not too much has changed. So we wanted to see 39,800 gained. We're, you know, just getting some swing lows that get bought up similar to RTY, and we have closed back in the range. So that essentially we're just, you know, slurping the bottom and looking for continuation. But we haven't had any confirmation yet. So look for a close above 39,820. If we can get that, look for a retest in that zone, potentially for a long there. Otherwise, if we do fail these zones, you know, we're looking probably more down to 38,000. We have it marked 38,080, but you know, it's a range, so somewhere around there. And if not, let's even look at the weekly. It could be quite a bit lower than that. You know, we have a lot of tests on the way up here, so you could even be talking about as low as untested consolidation here at 36,350-ish. So it could be a lookout below moment if we get further failure on the Dow. But as of now, we don't see any confirmation of that. In fact, we do see some nice closing back in the range here. So we'll just have to kind of see what happens. Oil has been kind of resilient. I know that Price had mentioned last week that, you know, he expected it's possible that we could slurp these lows and sort of regain and come back up. But we've seen a lot of that. Every time we do see a new swing low, we see it slurping close back in the range. Kind of another similar look. We keep failing, but when we take out all the stops at new lows, we've closed back in the range again. So really what I'm looking for, and I know there are more local levels, like just above, you know, 7850. If we can regain that, sure, we can continue higher. Let's focus on the bigger picture, taking out the failure that really sent us down here. So 82, if we can regain that, that's strong. Closing back in that range would be a close above 80.66. That would give me a lot of confidence that we're probably going to end up seeing higher. But as of right now, oil's been pretty rippy to trade, so it's been a tough market. If we can't regain these levels up here at 80, though, we're probably going to make new lows. So that's kind of the key level I'm watching, and we'll have to see what happens going forward. The dollar, you know, we talked last time about this is definitely ripped down and lost levels. So you know, Monday, continuation of that a bit, but we have started to regain locally. However, this has a long way to go to really regain here. So we're going to need to close back above 103.9. And really the failure that sent us down is kind of way up here at 104.2. So we've got a long way to go if we're going to be looking for longs on the dollar. Otherwise, you know, if we do fail those levels, new lows are likely. I would not be surprised to see 105 or 101.5, 101.4. Now that's kind of the swing from the actual major swing low on this whole leg down. That would not be unheard of to see that retested. But the key levels are, if we can regain 104.2, we can talk about regaining the uptrend here. If we don't regain that level, new lows are likely, so keep that in mind. And lastly, the KRE, another kind of consolidation sideways sort of looking chart. This is not outside of what our expectations were. This is a big move down. We could see some retracement. If we can regain 56.58, then that's really the level that we're looking at to see what's going to happen next. Otherwise, anywhere in this range, like we talked about last time, is still totally valid for a higher low. But we could regain earlier if we can regain 56.58. If we can regain that, hold, we can continue to make new highs. But if we can't regain that, or we gain it and lose it again really quickly, we'll have to make new lows lower than this low, which is kind of but the sub 50 ranges are going to be more likely. So that $49 area that we've been talking about, and more likely that we like, is kind of the mid 47s. So that is kind of the major area to watch, 56.58. Otherwise, I think the markets have been pretty choppy. I would not be shocked, and this is not really based in any like fundamental analysis or anything, but we've had some pretty big moves down. I wouldn't be too shocked to see some relief rallies continuing higher, and then really hitting those key higher time frame key levels, like the failures that sent us down. If we can get back to those levels, there's going to be big decisions made, because if we don't regain those, it could be a huge another leg down on the higher time frames, like the weekly chart and the daily chart. So I would expect kind of smaller relief moves up. If we don't regain like the levels on the lower time frames, we could still see continuation down play out on those time frames into the higher time frames as well. So it's been a spicy second half of the summer so far. We'll see what we can get in the coming weeks, but thanks for tuning into the Trader Hub Weekly Market Review. If you like this kind of content, sub to the Hub and consider joining our Trader Hub Discord community server. You can find it using our link in the description. See you next week.